live, by the way.
Are we live?
Yeah. I just want to test
Oh, thank you, Javi, for that. We're just staring there. Yeah. Assalamu alaikum wa rahmatullahi wa barakatuh, brothers and sisters. Hope you guys are well, inshallah. Please let me know if you guys can hear us clearly. We're going to start in a minute, so if you can, inshallah, put maybe just
put a timer in there. So
no, just start. If you go live, you go live. Are we live?
yeah, it says live. I don't know.
No, that's
it's not allowing me to.
no, because there's two. There's one I did on my phone. Don't go to that one because that one I didn't go live with this StreamYard. So guys, if you can hear me, just type 1, so we know that you guys can hear us, so we can start. Good. Okay, Sheikh, if you can speak as well.
Assalamu alaikum wa rahmatullah. Can you hear me?
Let me know, guys, if you can hear Sheikh Salman. Perfect. All right, brilliant. Inshallah, brothers and sisters, if you guys are watching this, I'm sure you are. Inshallah, as you guys know, I've done a podcast with the Pfida team. Alhamdulillah, brother Reza and Sheikh Salman. Assalamu alaikum. You guys are thanks for your time. Obviously, you guys, I don't know if you guys watched the podcast. If you haven't watched the podcast, it was an introduction to what Pfida do, how they started, the idea, starting in, was it Mecca? The Holy Lands, the journey starts, alhamdulillah. So yeah, so I think for those who may be new, maybe we can just give us, let's start fresh, maybe just in the sense where there might be new viewers, they don't know what this is about. Those who know anyways. But tell us a bit about what is Pfida, and again, where did it start from?
Sure. So first of all, the word Pfida comes from Arabic. Pfida means goodness or benefit, and our name is with a P at the start, which stands for people. We want to bring goodness and benefit to the people. In terms of what we do, we provide a halal alternative to a mortgage to help people into home ownership without any debt, without any riba. So unlike a mortgage, which involves borrowing money from the bank and paying that money back with interest, we go into co-ownership with our customers. We invest in that property as partners with our customers, and our customers can then choose to buy us out over time if they want, but with no obligation.
Okay.
So literally choose from month to month what they want to pay.
Okay.
You can choose to pay just your rent this month on our share of the property. You can choose to pay your rent and buy some of our share next month if you like. And you can effectively choose what you like to pay whenever you like to pay, which results in a very flexible structure, which allows you to buy the property up to 100% on your own terms and in your own time. And we grant discounts and incentives to help you along the way to help you achieve your goals.
So you're not a bank?
We're not a bank. We're actually set up a bit more like a cooperative. With a bank, the bank takes on regulated deposits and it lends out on regulated mortgages. We're set up more like a cooperative where our customers effectively share in the profits of the business.
Okay.
So our customers are effectively similar to the owners of the business. We do have shareholders as well, but actually even our shareholders are just members of the community. They're not faceless corporations or anything like that. The only institutional shareholder we have is Crisis the Homeless Charity, which is a nationwide charity focused on ending homelessness. So even our shareholders are actually community-based shareholders. And we run like a cooperative where we do have savings accounts. So customers can place money with us, get a halal return. That return is the form of a profit share on the homes that we're funding, the rental income that we're making. We grant a profit share to our savers, and that's how the system works.
So that's the only side, like a little bit like a bank in the sense where it's a saving account.
So we fulfill a similar function to a bank, but in a halal framework. We're set up very differently to a bank. So we fulfill the similar functions, but using a completely different structure. There's no debt anywhere in our model, no riba anywhere in our model. It's a pure, equitable, ethical halal model that we've created as an alternative to the banking system.
So from what I understand is that basically you have two services. The first one is the buying of the house. The second is people putting their money into a, what do we call it, saving account? What is it?
So it's an investment account.
An investment account where you use those funds to invest in the properties that you are buying for individuals who are on a waiting list, and they get a specific car, which is it's a direct investment. And because there's no riba involved in the property, there is no riba in the investment.
Exactly. It's worth actually clarifying, because at home people may say, well, how's that different to a bank? So it's worth actually clarifying, both on the savings side and on the home buying side. how it's different to a bank. So, Sheikh, maybe you want to talk a bit about
Yeah,
Yeah, please
yeah.
share.
So I often get asked, well, how are you different to a conventional bank? And there's a lot of people out there who feel that, well, Islamic finance, is it really genuine? Is it really sort of reverse engineering and in a roundabout way doing the same thing as interest-bearing lending,
Yes.
and so on? So and there is a reason for that bit of skepticism in the community, and that's because the Islamic banks, those institutions that are regulated as banks, like they're called Islamic banks. We're not a bank; we're a non-banking financial institution. The Islamic banks have, in general, and I'm a banking lawyer by background. My practice in a law firm, both here and out in the Middle East, was purely on Islamic banking. So we advised all the Islamic banks globally. And what I found was that they started off with, this is a conventional product. This is a conventional savings account or a current account, or this is a conventional mortgage. How can we reverse engineer that using traditional Islamic contracts to achieve the same financial outcome as an interest-bearing loan? So their starting point was actually, let's just create a loan in all but name. And that's what filled me and many others with a lot of moral compunction, that we don't think that's right. So we at Pfida, we've built our business model from ground up based on Sharia principles, based on authenticity, not to reverse engineer those those interest-bearing financial products. So that's really important, because our raison d'etre is very, very different to Islamic banks. So we want to differentiate ourselves from those. So, and then I get asked, well, how can I tell? How can an ordinary person on the street tell that a financial product is genuine, or is it actually in a roundabout way creating the same effect as riba and interest? How can the ordinary person tell? And I give people one tool. If you can apply that one tool, one question you can ask yourself, then you will get 90% of the way there to the answer. Of course, you might need some sort of expertise in Sharia advice, because contracts can sometimes be complex. So that one question is the person providing the money, or is the person receiving the money? Let's put it the other way around. Is the person receiving the money in debt? Do they owe that money back to the provider? So here, the provider of the home finance, when they're giving me, the customer, the money, do I owe that as an IOU, as a debt back to them after a period of time?
Okay, right? Can you? I want to write this down, because I'm one of those laymen that want to understand that. So, is the person
receiving the money?
Yes.
Or in receipt of the finance?
Yes.
Do they owe that money back as a debt?
Okay, so are they in debt?
Are they in debt?
Okay,
yeah.
Perfect. Okay.
Yeah, because debt can be created in a roundabout way. It doesn't have to be a straightforward loan.
Okay.
Yeah. Now, if they're in debt, then if they're also obligated to pay additional money on top of that debt, that's your red flag.
Okay.
Because the definition of riba that many scholars give in Islamic law is any increase on a debt, on a financial liability.
Yeah. Okay. Everything's fine, yeah?
Yeah, no, because you know what, they're asking questions.
We're going to come to the questions, guys, in a minute, inshallah. We're just going to go through some few questions that we have here. Then we're going to ask you, go for the questions. And if you can, Jabi, tell us the questions that people are asking, we can put on the thing. Yeah. How many people watching roughly?
It's about 117.
Okay, 117 people. Okay, so, all right. Yeah, because someone in the comment, because there are quite a bit of funny comments. Obviously, the majority of them are quite good.
Yeah.
You know, there's some funny ones as well. I get those funny comments all the time. So I'm used to it. Yeah, they were saying that by you guys charging rent, it's like riba.
Yeah, so let's answer that question. What's the difference? So let me give an example. I'll give you 3 examples. So we'll start off with a conventional mortgage. Then we'll look at an Islamic mortgage, and then we'll look at us. And we'll see what the differences are. So in a conventional mortgage, somebody wants to buy a house. The house costs 100K. They've only got 20K. They need 80K, right? So they go to the bank, they go to the high street, Barclays, HSBC, Lloyds, whatever, and they say, I need 80K. They say, we'll lend it to you. We'll lend you 80K, and then we'll charge you interest on the 80K. And until you've paid the 80K back, we'll charge you interest on that. And you say, well, that's not permissible. That's riba, right? So you walk away. You then walk into an Islamic bank. And the Islamic bank says, I can't charge you interest, but what I can do is get into a co-ownership with you. So we'll put in 80K, you put in 20K. On day one, we have a co-ownership. In Arabic, we call this a musharaka. Okay. And that co-ownership is actually a lovely contract. There's nothing wrong with it. And in fact, it's encouraged. It's a type of partnership. Yeah. So you get into this co-ownership. But what the bank does on day one, in the same contract or in the same sort of transaction, they say, you, the customer, you must buy our share of the property off of us for exactly 80K.
Okay.
So you enter into a binding contract, you're bound, you're obligated. You can't get out of that. You now effectively owe them the 80K. And of course, if you had the 80K today, you wouldn't need to go to them. So they will allow you to pay in installments over 20 or 30 years or however long. Right? And so what happens now is a credit relationship. You owe them the 80K, and this is really important. You have a credit relationship with them. You're given the facility to pay them late over time, right? Now, again, that's not a problem because they've put in 80K and then they sold you their share for 80K. It looks a bit like a qard hasan, an interest-free loan. Because so far they haven't charged you anything on top of the 80K. So far, so good. The problem now is there's a third contract. The first contract was the co-ownership. Second contract is the sale. The third contract is the lease. They say until you've fulfilled your credit obligations, until you've paid back the 80K, you have to pay us rent on the property. And lo and behold, that rent is calculated as a percentage on the 80K. So can you see, in 3 steps instead of 1, you've got a reverse engineered, effectively, that you've got the economic outcome of an interest-bearing loan.
And that rent is determined by the Bank of England?
Often, yes. Often what they'll do, they'll benchmark the rent. And so they'll calculate that rent in exactly the same way as high street banks calculate interest on a mortgage. They'll say, whatever outstanding amount there is on that 80K, you pay a Bank of England base rate plus a percentage of that outstanding amount on a monthly basis. That's how it's calculated. So that's why many scholars have contentions about the way Islamic banks do their product because of this mechanism. So now, if you think about this mechanism, what would make that? How could we tweak it to make this Sharia compliant or make it more authentic? And the way you tweak it is if you can take away the debt element. So that second step, which is where the bank requires you, obligates you to buy their share for 80K. If you just took that bit away, then what you'd be left with is the bank taking genuine risk in the property as a landlord because it hasn't passed on that risk to you by selling it to you. And therefore, as a landlord who's taking genuine risk in the property, if they're charging you rent for the privilege of living in the property, it's a pure landlord-tenant relationship. There's no debt, you see. So that's effectively what we do. We've taken the debt element away and we've given our customers the option, but not the obligation to buy our share out.
So it's an option.
It's an option.
It's an obligation. That's why a lot of the...
It's offer and acceptance each and every month on the spot. So the way I like to think of it, so as Sheikh Salman mentioned, with a mortgage, you're borrowing money from the bank, paying back the debt with interest. That's very clearly, many people will know that's the haram contract. When you're renting from a landlord, however, your only obligation is to pay rent. You don't own the property. There's no contract to buy the property. Your only contract is your lease to pay the rent. And most people here will have no problem with the rental contract. So how do we know? When we see a rental contract with a landlord, we inherently know this is halal, this is rent. We inherently know this is rent. When we see a mortgage loan with interest, we inherently know this is riba. How do we tell the difference? The difference is, as Sheikh Salman said, the asset test, there is no debt. With a landlord, you're paying your rent, but you don't owe them the capital sum. The value of the property, you don't owe them that because there is no debt. So you're genuinely renting that asset. The landlord owns it, not you. So you're renting something you don't own. You cannot rent something you already own, right? So if you're renting something you don't own, we know inherently that is clearly rent, that is halal. Now you can still go to your landlord anytime and you can say, Mr. Landlord, I want to buy your property from you. That's called an offer. And the landlord can say, yes, sure, I would like to sell my property to you. That's called acceptance. Offer and acceptance is unlinked to the original rental contract, right? Because you don't have any obligation to offer to buy the landlord's property. It's up to you. So you can make an offer anytime you like, and the landlord can choose to accept. That is offer and acceptance on the spot, completely unrelated to your rental contract. Now, although this is 2 contracts, one is if the landlord says, yes, you can buy my property from me, that's a sale contract. You've already got a rental contract, so that's two contracts. But they're not related to each other. They're independent, so it doesn't contravene the Sharia prohibition of having 2 contracts of sale in one. So that's how our product works. Just like going to your landlord anytime and making an offer to buy their property. With us, you can make an offer, but instead of having to buy the whole property, you can buy it in chunks. This month you can say, Mr. Landlord, I would like to buy £10,000 share of the property. Next month you can say, actually, I just want to pay my rent. Next month you can say, Mr. Landlord, I would like to buy £5,000 share of the property. So it's offer and acceptance, completely optional, no obligation whatsoever. And that's how you know there aren't two contracts in one. And just like any of us would feel comfortable going to a landlord and saying, I'd like to buy your property, that is exactly how the Pfida product works. You have the option to go to us, we act as a landlord, anytime you like in any month, and say, I would like to buy some additional shares in your property.
Okay. Do we have any questions over there, Jabi?
We were just asking if it's international.
Okay. Does Pfida, just a quick question, does Pfida have any kind of terms in there that they can refuse for the person who wants to purchase the house, to say, like, for any means, no, like, you cannot buy shares? Sorry, it's a random question. I just
can refuse. I didn't understand.
So, for example,
refusal.
if I have a house with you guys and I say I want to purchase, I want to give, I don't know, 50,000, I want to pay the whole thing off.
I see.
Do you have a clause where you like, argument sake, no, you can't, or you can't pay that sum, or you can't clear the debt, or not the debt, or buy the house outright?
That's right. So this goes back to Sharia compliance. So just as there's no obligation on the customer to buy our share, because that would create a debt, there's no obligation on us to buy their share or to sell our share to them.
Just like your landlord. When you offer to buy your landlord's property, the landlord doesn't have to say yes.
Yes.
But we have a policy. We're here to get people to full home ownership.
Yes.
So our policy is whenever someone wants to buy our share, our policy is to always say yes, to always sell it to them.
Okay.
Right? So although there is nothing in contract, because actually if it was in the contract, that would now become debt. So it cannot be stipulated in the contract. But instead we can have a policy saying our whole reason for existing is to actually get people to own their homes. So our policy is whenever a customer wants to buy shares from us, we will sell to them. And actually this is managed through our tech platform. The dashboard our customers get, where they can go and choose how much they want to buy, it's all automated. So it's not that they ask us and we decide will we sell it. It's done automatically through the dashboard because that policy is coded into the dashboard already.
So if argument said I have a house and my debt left to purchase the house fully is 100,000, and I say I want to give 100,000, I can do it there. Like, I mean, obviously not, but I can do that option.
So because it's a large sum,
yes,
we have to do source of funds checks for regulatory reasons.
Of course,
money's coming from. Now, also for large sums, the only thing we may do is request a notice period because we need to take that money and do something useful with it, right? So we need to be able to allocate it to another property. So we may just require a notice period. But our policies will always accept we may just require a notice period for very large sums.
Okay, all right, interesting. Okay.
Does the monthly rent? There's a monthly rent count towards the share.
Okay, so the question is asked by who? Can we have it on the screen so people can see as well, if it's possible?
Brother Malik Shakar.
So Brother Malik Shakar is asking.
He's asking, does the monthly rent count towards the share?
Okay, good. So this was another question people were asking. Does the monthly rent count towards the share? I think it means
the monthly payment.
Yeah, so they're thinking the rent that they pay, the rent that's being paid, does it go towards the share, which I'm sure it's not.
Well, there's a monthly payment, which includes a bit of equity payment and a bit of rent. I'll let Raza explain.
Yeah, so what we do is we say, right, let's say it's a £100,000 property, okay? And for argument's sake, you're a 50% co-owner and we're a 50% co-owner, right?
Yes.
So you've put in 50,000 towards it, we've put in 50,000 towards it. So we're 50-50 partners. Now, for that property, we'll assess the rent, right? And let's say we assess the rent to be £1,000 per month. Now, because you're a 50% partner, your rent will be reduced by 50%. So your rent will be £500 per month. You're only paying rent on our share. Now, you can choose to just pay rent. Just pay the fair rent for renting that property. Instead of paying 1,000, which is what you'd pay to rent that property, you're going to pay 500 to rent our 50% share of the property. So you can choose to just pay rent. But we know our customers aren't coming to us to just rent a property. So our customers will come to us and say, I'd like to fully own this home over, let's say, 30 years. Okay. So what we'll do is we'll do some maths and we'll say, to achieve your goal, here's how much equity you need to purchase from us every month.
Besides the rent?
Besides the rent.
Good, okay.
Just like when you're renting from your landlord, your rent doesn't count towards buying the property. That's a separate offer and acceptance. I'd like to buy your property from you. The landlord won't say, okay, you've been renting from me from the last year, so I'll knock that off the property. The rent is a completely separate agreement.
That's for the service.
Right? So what we'll do is we'll say, right, here's how much of our share you need to purchase every month. If you stuck to this profile after 30 years, you would fully own the property, right? Now, you don't have to stick to that. You can go higher, you can go lower, you can throw it out the window. That's just maths to help you understand your goal. But we want to help you achieve your goal. So what we do is we say, whenever you stick to that target, we're going to give you a rental discount. We're going to charge you less rent in the months when you stick to your target. So for argument's sake, instead of paying £500, if you pay a little bit extra, let's say £600, we're going to give you a rental discount whenever you pay £600. And that rental discount is typically at least 5 to 10%.
Okay.
In some cases, it can be 30%. In some very rare cases, it can be even higher. Let's say it's 30%. So in any month where you pay £600, instead of charging you 500 of that as rent, we're going to discount that 500 by 30% and only charge £350 rent in that month. And the remainder, 250, will all go towards equity purchase. So that's how we incentivize you to stick to your goal.
Just sorry, why would you? I'm just sorry. Why would you give that discount? You don't have to. Like, I'm just curious. Why would you? Just because they're buying their shares out, why are you reducing the rent? Because it's something maybe I didn't understand.
So the rent reduces anyway as you buy equity.
Yeah, but not to that rate.
Next month your rent will be reduced.
Yeah.
But on top of your rent reducing as you're buying equity, we also give a rental discount to encourage you and incentivize you to stick to your goal. Because we want you to get to full home ownership.
Okay, because the objective is for you to buy the house.
Exactly.
Yeah.
So our mission is to get you to full home ownership, and we actually charge less rent. We take less profit from you in pursuit of that goal of getting you to home ownership. Whenever you're sticking to your goal, we actually charge you less rent. Right? Now, there's a couple of reasons for this. One is because we don't want to trap people in a rental cycle, because otherwise it's too convenient to say, "Oh, I'm just going to pay rent because then I've got a bit of money left over. I can go and buy a car or whatever," right? It's too convenient to do that.
Yeah.
Whereas actually, if you know that by not just paying rent, by sticking to your target, you're going to get a big rental discount, then you'll think twice. Okay, maybe I won't buy the car yet because actually, if I buy the car this month, I won't get my rental discount, right? So that's a big incentive to encourage our customers to get to full home ownership. But on top of that, if you think about how a landlord works, when you're paying rent to your landlord, let's say you're paying £1,000 per month for argument's sake. How much of that 1,000 is the landlord's profit? The landlord takes £1,000 rent from you. They have to hold aside, let's say, maybe £200 of that to allow for maintenance and costs, right? So not all of that 1,000 is the landlord's profit. Maybe 10, 20% is their expenses in maintaining the property. So what we do is we say, okay, that rental discount acts a bit like a service fee that we're paying to you. And that's because you're living in the property. We're not in the property. You're the one living in and enjoying the property. So we'll contribute towards our share of maintenance, partly through this service fee. And then you take care of maintenance, right? So we've given you a discount that's like a service fee. Now you take care of the maintenance because you're the one living in the property. So we'll cover our cost, but we don't want to have to do all the admin because that will increase our costs and we won't be able to charge as competitive a rate. So that's the other reason for giving the rental discount.
Okay, hope that answers your question. How many people watching roughly?
About 177.
Okay. Okay. So for those who just joined, we are here with the Pfida team, Brother Reza and Sheikh Salman. So we're just obviously, if you guys didn't watch the podcast that we've done, you can go and watch that on my channel. So we're just kind of, should we say, cross-examining. Yes, we're just doing some questions. We're asking some questions, inshallah, just to further understand, because there was a lot of people asking questions. I don't have the answers for these, and we can maybe do these regularly as these questions come in. We'll see, inshallah. Also, there is a link on the description. I'm going to try to put that link on the chat as well, if you guys want to sign up as you hear what this product, what the service is about, inshallah. So yeah, we're going to, inshallah, go. There was a point in the podcast where there was a sound issue. Jabi, I don't know why that happened. You can explain to us later. we've got the editor here. So yeah, so it was a mistake, but I didn't proof watch it. Sadly, which is my fault as well. So we take the blame, not the Pfida team. Yeah. So we're going to ask that same question, inshallah, so we can get a clear answer. So for those who missed that 30 seconds, we're going to ask Sheikh Salman that question, which was, Sheikh, it was who owns the property?
Yes. So we have two products, two flagship products. One is residential. That's what most people want. We also have a buy-to-let. The structure is slightly different for each product. So I'll start with the residential. So under the residential home ownership program that we have a special purpose company called Pfida Finance Limited.
Okay.
So that Sorry, Pfida Finance PLC. That's right. Sorry.
It's very particular. It's good.
I'm the one who should be particular. I'm the lawyer.
Yeah.
Yeah. So sometimes he corrects me, even though
Yeah.
I'm the lawyer. But so Pfida Finance PLC.
Yeah.
So that buys the property,
Yeah.
and our customer, whose equity is reflected in the property, their equity is reflected by the shares that they own in that company.
Okay.
So
Remember I said earlier,
Yeah.
our customers, it's like a cooperative.
Yes.
Our customers are like the owners,
Yeah.
and they get profit shares.
Yes. Yes.
And this is what
yeah,
I mean.
yeah. So there's different ways to do it. We do it in this way for a reason. So, for example, that's the house. Pfida Finance PLC
Yes.
buys the house.
Yeah.
The customer buys shares in Pfida Finance PLC. Simple example. Suppose the house costs £100,000.
Yeah.
And Pfida Finance PLC puts £80,000 towards that purchase, and the customer puts in £20,000.
Yeah.
The £20,000 is reflected by the customer buying £20,000 worth of shares in that company.
Yes.
And then the customer has a contract with that company saying that their shares in the company reflects the value of their share in the property. They also have a lease with that company, which gives them the security of tenure, gives them the right to live in the property.
Yeah.
And then it's by virtue of that lease that they will pay rent to the company on the share of the property that the company owns. So it's a very, very simple model. And what that enables people to do is people can save with us by buying shares in that company well in advance of purchasing their property. And then those shares become their equity in the property when their turn arrives. And then the company buys a property for them.
Okay, interesting. So just to repeat it, I like to drop it it was very simple, but just in case. So £100,000 house, let's suppose, what was the thing, not saving account, what was it called?
An investment.
An investment account. So we have 80 people who have put £1,000 in the investment account. I come and say, I want to buy a house that's £100,000. I have £20,000. I'm one individual that owns 20% of that share. The 80 different individuals who put £1,000 in the investment, that funds will go into that house. So those 80 people own that share of the house. I own the 20% share of the house, and I can buy them out slowly.
Well, not directly. So
Not
those
direct,
80 people,
Yes.
they also have shares in that company. And you're right, it's their money that's channeled
Yes.
through to purchase that
Yeah.
property.
Yeah.
And what they have is they have the economic right
Yes.
to receive a share of the rental income,
Which you give.
which we'll give them.
Yes.
Which the company will
But
give.
that company has lots of properties in it.
Exactly. So we're talking if it's one property, but because there's so many properties, then it just
That's right.
Exactly.
scatters it.
So those other investors,
Yeah.
they have shares in the company generally, not in your specific house.
Yes, exactly. Yeah, just because I gave one example, one house, but we had good news that it's not one house. How many houses have you guys so far?
By the end of this year, inshallah, we'll hit somewhere between 140 and 150.
Oh, okay. Because last time I came here, you were celebrating the 100th. Was it the 100th house?
100th, yeah, alhamdulillah.
Okay,
So
that's-
we're growing.
Yeah, that's
quite
nearly
steadily.
what percentage growth? Because last time it was 100, so it's
Nearly 50%.
50%. Yeah, nearly 50%. Alhamdulillah. So that's good. So that means if I see you in a month, it's going to be 200.
Inshallah. Make that.
Yeah, inshallah. Yeah. Okay. All right. Good. Interesting. Any questions from people that are watching?
Yeah, they asked it. How come the rent is quite expensive for equity compared to Gatehouse Bank?
Okay. How come the equity is expensive compared to what?
Gatehouse Bank.
The rent. How come the rent?
Yeah,
So
the rent.
is our rental rate more expensive than Gatehouse?
Is it? I don't know.
So I don't believe it is.
Yeah.
You can check our calculators online. Now we've got two products. One is what we call our standard product. One is what we call our discounted product.
Okay.
Now the standard product should be very similar to the range of Islamic banks, right? We offer a discounted rental rate to customers who open a savings account with us, right?
Oh, okay.
And that's because they're feeding into the system, supporting others while they're waiting for their turn.
Okay.
So when their turn comes, we actually offer a lower rent compared to our standard product.
Oh, okay.
And we make sure that the discounted product, the discounted rent we charge, this is before the monthly discounts. So this is just the base rent. We actually provide a lower base rent. That should be lower than any Islamic bank mortgage. It should be in the range of, very competitive even with the conventional market.
Okay.
So if you're checking the standard product, which is you go on our website, you sign up, you don't open an account or anything like that, you just sign up and put yourself on the waiting list, then you'll get the standard rate. And that will be similar to other Islamic offerings out there.
Okay.
But if you are willing to feed into the project, help others while you're waiting for your turn, treat it as a big community initiative where we're all supporting each other, then we reward you for that by giving you a better rate of finance for life, inshallah. Now, I should note here, because it's very important that we do this for regulatory and just for moral reasons, that our products involve an element of investing. Okay. Now, for regulatory reasons, it's very important that our customers understand what that means and understands that there are risks with investing.
Of course.
So when you put money in a bank account, you're effectively lending money to the bank. The bank owes you that money and it's guaranteed. And that's why any interest you get on that is not permitted, because that's riba. Right? When you're investing, your money is not necessarily guaranteed. What are you investing in with us? You're investing in property. Okay. So your money is going directly into properties. Now, it's very important you understand what that means. And so when you go onto our website, what you'll see, the first thing we'll be presented with is a risk warning saying that if you're high net worth or sophisticated as an investor, you can proceed. If you're not high net worth or sophisticated, it's very important that you should seek financial advice before proceeding.
What do you mean by that?
So you need to speak to an independent advisor who understands financial products. So someone completely independent of Pfida who can advise you so that you know exactly what investing means.
So if you have experience.
If you're experienced,
then
you're used to investing, or if you're high net worth, no problem, continue. But if you're not used to investing, then it's very important you get financial advice, because our products involve an element of investing. And we can help arrange that. So we work with independent financial advisors who aren't associated with us in any way, shape or form. And we can arrange meetings with them, and we can help you get the advice you need so that you then can enter this arrangement eyes wide open, knowing exactly what it means for you. And then there's no room for misunderstandings later on. So it's very important to understand that about our products. Because we're not a bank, we don't deal with lending or debt. Our products are structured as investments instead. And in Islam, if you want to make a return, you have to be willing to take risk.
Of course, otherwise it's not.
Otherwise
it's not investment, is it?
Otherwise it's not investment, it's a loan with interest.
Exactly. Okay, the second question could probably lead to get people to sign up as well. What steps should customers take before deciding if it's right for them?
So customers should find out about what the product is, make sure that they're comfortable with it. We've got some of the features of that on our website. We've got a lot of material on our YouTube channel. We do regular quarterly webinars where we explain the model. We answer lots of questions. So those are really, really informative. And whenever people ask me that question, the first thing I do is refer them to our webinar on our YouTube channel. So that's it's a bit long. It's a couple of hours, an hour and a half.
Is that the link that I have? Or is that separate?
No, that's
separate. Okay, so where can they find that?
On our YouTube channel, go to YouTube, search Pfida, and you'll see a video Q&A with the founders.
Oh, okay. All right. Okay, so that will give you a brief explanation.
Yeah, we do a 2-hour session where people ask us questions live, and we answer hundreds of questions in that webinar. And it's timestamped, so you can skip to the questions you're most interested in as well.
Okay, all right, perfect. You guys go and check that, inshallah. Do you have any more questions? Is there any on the thing that we can pin? Is there any that you can put on the screen or on StreamYard? So
They're asking if it's international or UK.
Okay, so there was a lot of people asking from, I think it was Australia, America, Canada. Are they saying this is? I'm assuming this is only UK based.
So just to give the address of the website, it's pfida.com, Pfida.com.
Pfida.com, yeah.
There's a lot of information on the website.
Okay, perfect. Okay, so did we answer that question? Yeah. So is it only UK based?
So at the moment, we ourselves directly are only funding homes in the UK. However, we are now starting to have interesting conversations with providers in other parts of the world. So for example, there are startups in other parts of the world who want to do what we're doing. And rather than them reinventing the wheel, we've already created the agreements, we've already created the tech platform, we've created the underwriting structure. So the conversations we're having with them is, look, we want this model, this equitable product to be available all over the world, because Muslims all over the world need this. So we're now seeing how we can help other providers in other parts of the world, how we can help them get to market much, much quicker. Whether we can lend them our tech, lend them our financial agreements so that they can start supporting customers in their part of the world much quicker. So we're not operational in other parts of the world yet, but we're working to get other providers operational as quickly as we can, inshallah.
Okay. Perfect. Hope to answer your question, guys.
The kind of territories we're working in at the moment, having very interesting conversations in America, in Canada, and Australia. And if anyone knows providers in other parts of the world, and Malaysia, and if anyone knows providers in their part of the world who might want to work with us to accelerate them to market, then please get in touch with us, and we're happy to have these conversations because we want the Pfida to come to people all over the world.
Inshallah. Okay. Any other questions from this?
Depends on the question, but they're asking how long is the waiting list?
Okay, so one other thing was the waiting list. They said it's up to 5 years, and I mean you can't explain why that is. It's not rocket science, but yeah.
Yeah, I mean, first I'll explain why it's so long, and then there is a way of actually getting served much quicker than that as well, and I'll explain that as well. So why is it so long? Well, it's frankly because, alhamdulillah, our product is so different, so unique, and the demand for it has just skyrocketed. Alhamdulillah, people really see what it is we're providing. It's very different to anything else out there. As Sheikh Salman said, and I'm very proud of having Sheikh Salman on board, because I think we can safely say we are one of the only Islamic financial institutions in the world where one of the founding members is a Sharia scholar. So the brickwork is based on Sharia, rather than building the product and then getting a Sharia to come and approve it, a scholar to come and approve it separately. So as a result of that, we're getting huge demand. Literally every day we're getting people saying, I've never felt comfortable with any of the products on the market. Finally, I have a product I believe in. So the demand has gone through the roof, and as a result, we have a very long waiting list. Now, there are ways to get served much, much quicker. We estimate at the moment, if you just come on the waiting list, go to the website, sign up, say, add me to the waiting list, we estimate it is about a 5-year wait at the moment. And that's because we're still relatively small. We're growing rapidly, alhamdulillah, but we're still not the size of the banks, right? We're still relatively small. But it's also because there's just so much demand, okay? And to give an indication, in the UK at present, there's about 4 million Muslims. If you consider Al Rayan Bank, the largest Islamic bank in the UK, it took them, and don't quote me on these figures, but I believe these figures are correct, so someone can Google it and check. To the best of my knowledge, it took them over 12 years when they were serving residential homes, 12 years to serve about 6,500 customers, 6,500 home buyers. Because funding homes, whether it's 6,500, 7,000, 5,000, it's in that ballpark. The point is that's out of 4 million Muslims in the UK. And Al Rayan Bank are the largest Islamic bank in the UK. Because the point is funding homes is extremely capital intensive. You need a huge sum of capital, and it just takes time. Okay, so that 6,500 homes is about a £3 billion portfolio, £3 billion, right? So it's extremely capital intensive and takes a lot of effort and time. And right now we're only one provider, and we're not as big as the big banks. So yes, there is a long waiting list. But as I said earlier, anyone who feeds into the system opens a savings account with us. We've got an account called GYS Home, Grow Your Savings for a Home. GYS stands for Grow Your Savings, right? So anyone who opens a GYS Home account with us, that's an account for people who want to ultimately buy a home with us. And they're very happy to help others while they wait with their saved up funds, right? So anyone who's willing to feed into this community structure, the reward for that is, first of all, you get a halal profit share, right? So you get a halal share of any rent that we're making. Second of all, and for me, by far the biggest reason to consider this is this true sadaqah jariyah. We know that dealing in riba is likened to waging war against Allah and His Rasul. In some narrations, it's likened to fornicating with your own mother. That's how severe riba is in Islam. Now imagine the reward of helping one family to avoid riba. Imagine the reward of helping dozens or hundreds or thousands of families to avoid riba, because you were willing to use your saved up funds to help other people while you waited for your turn. Right? So for me, that's by far the biggest reason to consider it. But then also, actually, we reward you. So as well as getting a halal return in this dunya and a halal return in the akhirah, inshallah, we reward you by saying, okay, we want to serve those people who are supporting the system first. So we prioritize you on the waiting list, and we serve you quicker. And instead of 5 years, there's still a wait. The absolute quickest we can do it is about 9 to 12 months. but it depends on how much you put in and how much funding you need. And on our website, there's an FAQ which explains, based on how much you put in and how much funding you need, it gives estimated waiting times, and they're estimates. We can't provide guarantees on waiting times because it depends on how long people take to find homes and things like that. But they are estimated waiting times. The absolute quickest is 9 to 12 months. So you can get served quicker if you're willing to feed into the system. But again, I must caveat, for regulatory reasons, before you consider making an investment, it's very important, if you're not used to investing, to get that financial advice. And the best advice we always give is, before making any big decision, remember to do istikhara, seek guidance from Allah, and make sure you're completely content before making any investment decisions.
Yeah, I mean, you've heard it there, brothers and sisters. Brother Reza explaining it. Yeah, 5 years can be a long waiting time, but you have the option of waiting 5 years to have a halal investment, or going to your local bank and getting involved in riba. I think I know which one I'll be picking. Even if it's, I'll be honest, even if it's 5-10 years, I think as Muslims, our goal and objective should be that. We live in a society where, sadly, we are programmed, everything is fast hand dryers, I dry my hands fast food, fast cars. Even the psychology behind it is very interesting, because I usually tie this to, when it comes to youngsters who want to get married, I give them advice. Like, I say, look, it's like, if you look at Uber, back in the days, you would order a cab. You wouldn't know when the cab's coming. And we as human beings, we don't like the unknown. We're uncomfortable at the unknown. We need to know, that's why. And there's so much hikmah in not knowing, I mean, imagine if we all knew when we're going to die, it's not going to be, we're going to be depressed people. So that's why Allah hasn't told us when we're going to die and when Yawm al-Qiyamah is. Some things are better not known. But when you have Uber now, where's the Uber? It's around the corner. When you text message someone, it says seen or not seen. He read it. He's ignoring me. Reza says, I message Ali, but he's not replying. Why is he not replying? So we live in a society where...
That actually happened, by the way.
Yeah, that did happen, yes. But it was not intentional. I was driving.
You get messages saying, I know you've read my message.
yeah, literally. It's come to that point. So when we look at the psychology of the Muslims, and this goes back to deeper problems, but it's like that. We're just so used to knowing when my Uber is. Everything is done so fast. There is no... there's nothing left of, like when Allah says in the Quran that Allah has a sunnah, Allah has a way of doing things, and it doesn't work on your time scale. Do you get it? We want everything fast. It doesn't work like that, bro. And this is such a bad habit that is installed in so many Muslims, that when they are faced with a calamity, it's, oh, brother, it's bound to, That's why, Allah says in the Quran, فَإِنَّ مَعَ الْعُسْرِ يُسْرًا إِنَّ مَعَ الْعُسْرِ يُسْرًا. With hardship comes ease. And Allah repeats the statement. Why is Allah subhanahu wa ta'ala repeating the statement? I would be like, did Allah forget? No. He's repeating the statement for a reason, because to me, it's like, if with hardship comes ease, the opposite has to be true. With ease comes hardship. So the attitude that we have today is that everything is so easy, and then we have hardship in the long run because we haven't programmed ourselves of patience, tawakkul. Do you get it? That's why a lot of people, the reason I'm connecting this to the question of, it's 5 years. Yes, it is. But, it's a test to you to pick the halal option or be involved in the investment, investing your money there, where it's a form of sadaqah jariyah, where you're helping other people as well, which I didn't think of it like that. What you told me today, I was like, that's actually quite profound. If I leave my money in a bank, they're going to give me interest. I'm like, I don't want the interest. I have to focus about how to get rid of the interest, how much the interest, But if I invest here, at least I know the least, forget the return. The return is there as well, whatever the percentage is. But at least I know I am a source of, taking a burden of an individual who doesn't want to be involved in riba. So it's quite profound, So we should really train and program ourselves of being patient and not wanting quick results. You can. Those options are there in those banks which charge riba.
The other thing, Ali, we often get customers saying, I've been renting for the last 25 years.
Yeah.
Because I didn't feel comfortable buying a house with any of the products on the market at the moment. So I concluded I would have to save up all my life and buy a house cash.
Yeah.
So I've been renting for the last 25 years.
Yeah.
And then when they find out the waiting list is 5 years, they say that's too long.
Come on, mate.
25 years, brother.
Well, yeah, that's come on. It's 80% less than the amount you waited. 25 years compared to 5, subhanAllah. Yeah, it's you pay 25 years rent, and
but the real question is, how do we bring that down?
And you said
the truth is, if we as an ummah believe in this product, and want this product to flourish, we will have a responsibility to get behind it and support it, because nobody else is going to do it, inshallah.
Exactly.
But as long as, again, I have to reiterate, making informed decisions, doing istikhara, making sure you understand there are risks with investing.
Yes. Okay. So, do you have any questions from the people?
Yeah, they were saying that. What happens if the house needs repairs?
I think we already discussed that. That's the responsibility of the if the house
So-
needs repairs.
So it depends on the type of repair.
Yeah. So Raza earlier said that that those additional rental discounts that we give, that's effectively like a float.
Yeah.
So we give that over to the customer, and then that accumulates. And then when when there's a major repair that needs to be done, then so we distinguish here between major structural repairs
Yes.
and minor maintenance, like wear and tear.
Okay.
Yeah. So if there's a bit of damage to on the walls, you just need a bit of polyfiller, right? That's not a major structural issue. We don't, as the landlord, get involved in that because that's wear and tear. That's the customer, the person who's living in the property. That's their
Because
responsibility.
the customer has a lease,
Yeah.
right? Unlike a short hold tenancy with the landlord, which is 1 year,
Yeah.
our customer has a lease which may be 20 years long.
Mm.
So minor maintenance is their responsibility under the terms of the lease.
Yeah, and that's what the Sharia requires. That the Sharia requires that the person who's a landlord, they have to take risk in the property. So Raza earlier said al-kharaju bil-daman, which is actually a statement of the Prophet Muhammad sallallahu alaihi wasallam, in which he says the right to a return on your investment must be based on the fact that you've taken risk in that investment or in that asset, that property, right? So the landlord has to be at risk. And what does that mean? That means that if there's a major structural repair required to the property, the landlord has to pay their share of it. So if we, as the part landlord, if we own 80%, we are responsible for paying 80%. So there's a hurricane, the roof blows off, right? That's major structural. And that costs £10,000, right? If we have an 80% share in the property, we have to pay £8,000 towards the fixing of that roof, right? Now, what we do is we've already, on a monthly basis, given those discounts to the customer, right? So if over the last, say, 5 years or 6 years or 10 years, that amounts to £8,000, what we'd say to the customer is, we've already contributed our contribution towards that cost, and it's been in your hands for the last 5, 6, 7 years. And then, so you would then take that as a float, as a reserve, and then pay for it on our behalf. Now, there could be a situation where actually we need to contribute £8,000, but the discounts we've given them have only amounted to £5,000. So there isn't enough in the discounts to cover it. At that point, we would fork out another £3,000 to make up the £8,000.
Okay.
And then we would then recoup that from the future discounts. Yeah.
Okay, interesting.
But there's also another type of discount we give. So a question we get asked a lot is, when customers are buying equity from us, do we revalue it? So do we sell at market value? And the answer is actually we don't.
So you're talking about if the house property increases?
The house price is going up.
Yeah.
So we have a right. We have a right to say, okay, you want to buy my property from me, just like your landlord would say. Landlord would say, okay, my property is worth £400,000 today. Pay me £400,000.
Yeah.
What we do is we say, okay, we bought the property 30 years ago for £100,000.
Yeah.
So actually just pay us £100,000, which means you're buying a £400,000 worth house for £100,000, and we're giving all the upside to you.
So why are you doing that? Because I mean, somebody will come and say, why would you do such a thing? Because if you think about it, guys, it's like, just so you guys understand, it's when banks, I think banks do what you said, the opposite, is that you're in a perpetual cycle. You're never buying the house. You're never buying the house. It's just because the house value goes up, etc. So why you guys? What's the reason?
It's a really great question.
Has it got anything to do with Pfida? Like that's a benefit to the people?
Well, ultimately, yes.
Let's
So
find out.
what we realized very quickly was, if you look at house prices in the UK, across the board, they tend to go up 5 to 10% per year in value. Right? But wages only tend to go up 1 to 2% per year. So if we were constantly revaluing the property, it would become more and more expensive, more and more unaffordable over time for our customers to ever get to full home ownership. And actually, that's what most shared ownership products do. They revalue the property and it becomes more and more unaffordable over time.
Okay.
So we decided, in the interests of fulfilling our vision of increasing wealth, particularly amongst Muslims who are very financially excluded, and increasing home ownership, particularly against Muslims who are very financially excluded, we decided to forego our upside and make our money off of the rental that we make instead. And that way, although we're gifting away a significant portion of our rightful share of the profit, we know we're making a product that's genuinely affordable, where our customers can genuinely get to full home ownership. And inshallah, the reward, we seek the reward in the akhirah for this, inshallah. Now, if a customer's buying the property out from us, that's what we do. If they decide to sell the property, right? So partway through, they say, actually, I don't want to live here anymore. I want to sell the property and move on. At that point, because we're partners, then we will say, okay, You take your share of any upside, and we will take our share of any upside. Because we're partners, we've shared in the risk, we have a right to that share.
Okay.
So if you're buying from us, we'll sell at the original price to make it affordable for you. If you're selling the property and moving on, you take your share, we take our share. That's fair, right?
Yeah.
There's an exception to that. If you're selling the property because you want to upsize, you want to buy another property with us. Let's say your family's growing, you need a bigger property. Again, we want to facilitate this. We want to facilitate an increase in wealth. And so what we say in that situation is, okay, you take your share. We're only going to take half of our profit. We're going to gift half of our profit to you. Again, that's our policy. We're going to gift half of our profit to you to facilitate you being able to buy a bigger house, inshallah. So we try and be as generous as we can to our customers at every step to make it very affordable and to genuinely increase financial inclusion, genuinely increase wealth and home ownership, whilst also trying to be fair to ourselves because we're genuinely sharing in the risk in the property, which banks don't do.
Okay, interesting, mashallah. Are you FSA licensed?
FCA license.
Oh, sorry,
So
FCA.
the FCA is the Financial Conduct Authority.
Yeah.
The FCA licenses all of the banks. Now, our product is not a banking product.
Yes.
So a banking product is based on debt.
Yeah.
And the FCA is there to license debt providers. Okay? Whereas the FCA does not license landlords. Landlords are not putting people into hundreds of thousands of pounds of debt.
Yeah.
So why does a bank mortgage need to be licensed? Because the word mortgage, by the way, comes from Latin. The first half, mort, means death.
Yeah.
Mortgage means death grip or death pledge. So when you take out a mortgage with a bank, you are taking on a debt worth hundreds of thousands of pounds for the rest of your life. The bank's got you in its grip.
Yeah.
Right? And if that is the wrong product for you, it will definitely ruin your life without a shadow of a doubt. Okay? When you're renting a property from a landlord, if that's the wrong property for you, okay, it will be annoying, but you can stop, change, move on anytime you like.
Yeah.
So where there is no debt, the FCA does not need to provide a license. So we do not require a separate license because we are not providing a debt-based banking product. We are actually just a landlord, right?
Yeah.
But although we don't require a specific license from the FCA, we still have to adhere to the regulations. So for example, as I mentioned, we have to ensure that our customers are getting financial advice where necessary. We have to ensure that we're only selling our products to customers who are either sophisticated enough to understand the risks of investing or who have sought financial advice to understand the risks of investing. We have to ensure that when customers come to us, we do full ID checks, full checks on the source of funds. We don't deal in cash at all. And we make sure all funds are legitimate.
Yeah.
So we have to adhere to all of the regulations, right? But we don't require a specific license because we're not providing a banking debt-based product.
Interesting. So that kind of answers the question about is this product for average person or for high net worth investors? But it's for, you said, for both.
Yeah, so that's the answer right there.
Yeah.
And actually, you know, the FCA license is a flag, isn't it, to tell you if a product is debt-based or not.
Exactly. So, in fact, that's quite a good way for people to tell whether a product is debt-based or not. So if the FCA has licensed an institution that's providing home finance, that's because it's a debt-based product. So the customer can use that as a cue to determine that actually I need to look a bit further and consider, this is probably debt-based, and therefore am I comfortable with it?
And that's the key word, comfortable, because we have to be very clear. What we're not saying is that all debt-based products are haram. No, not at all. If you take Islamic bank mortgages, they are signed off by very reputable scholars, right? Now, what is clear is, as Sheikh Salman mentioned earlier, the Islamic banking products have been designed to replicate the same outcome as the conventional products. They are still debt-based products, but they are a step along the journey, right? We cannot deny that Islamic banks have done a lot for Islamic finance to level the regulatory playing field and make it easier for providers like Pfida to enter the market and take Islamic finance to the next level, inshallah. That is undeniable. And why do the shuyukh sign off on these products? Those same shuyukh who are very reputable, very well-respected shuyukh, they will be the first to say, look, these products are not perfect. Okay, we're not signing them off because they're perfect. We're signing them off because they're a step in the right direction, because we need Muslims to buy homes. If we didn't sign them off, Muslims would stop buying homes and wealth would decline much further, and that would be a far greater evil.
Yeah.
And because we need to support the industry so that innovation, so that products like Pfida can actually come to market.
Yeah.
So there's a whole rationale behind it. So we have to be very careful not to fall into the trap of saying, if it's debt-based, it's haram. That's not what we're saying. What we're saying is, if it's debt-based, then it's got that greyness to it.
Yeah.
And some shuyukh are very comfortable with it.
Yeah.
Some shuyukh are very uncomfortable with it.
Yeah.
And you need to then decide whether you are comfortable with it and seek appropriate advice.
In fact, those scholars who do approve the banking products that are debt-based, they will unanimously say that this isn't perfect, as Raz has pointed out, but they'll say that it's a temporary step towards something that's more authentic. And they all call out for that more authentic approach, that more authentic way of doing things. And so, in a sense, we see Pfida as a response to that call. And all of those scholars who approve those Islamic banking products, when they see us, they're really proud of this. They say, well, this is great. This is what we're looking for.
Yeah, mashallah. That's amazing. Going towards right steps. So how does Pfida make money?
Yeah, so it's a very simple model. All of the homes that we fund, we charge rent on the share of the property that the customer doesn't belong to the customer.
Yeah.
So if the customer's put in 20%, the remaining 80%, we charge rent on that. Okay. Now, from that rent, a profit share of that goes to our investors. That's their profit share for having shares in the business. And the profit share from that comes to Pfida. That's our profit share for managing the whole scheme, providing all of the underwriting and expertise and administration. And this is called a mudaraba arrangement. You have capital providers who are called the Rabbul Mal, the owners of the capital, and you have the mudarib, which is us, who manages that capital, manages the scheme, and the mudarib is entitled to a profit share, which is compensation for managing the scheme. So effectively, the rental income that's coming in, part of that comes to Pfida, and that's how we make our money.
Okay.
And very occasionally on property sales as well, but that's not our core income.
Okay, perfect. We'll probably go for another 15, 20 minutes. Any questions there, Javi?
Yes, they're saying, what is the equity percentage that Pfida charge for 100,000 per house, and what are the fees and management as a percentage, approximately?
So it's not a good idea to get into figures here because it will vary by each property, by each individual. There are calculators on our website, so you can, if you go to our website at the top, there's buttons saying sign up and log in. If you sign up for an account, when you log into your account, you can go to the calculators and you can put in your figures and you can get an estimate of what it will cost monthly and what you can afford. And if you have further questions, then just send an email, info@pfida.com, Pfida, info@pfida.com, and the team will get back to you, inshallah. But specific questions like that, it doesn't really make sense to answer on a forum.
True. How is it different to shared ownerships?
So the key difference is with shared ownerships. Well, there's a few differences. First of all, shared ownerships will normally be offered on new build properties, either from councils or housing associations. So they'll normally only be offered on new build properties.
Yeah.
Whereas with our product, you can find the property yourself.
Yeah.
We'll get it surveyed, we'll get it valued, we'll make sure we both understand the ins and outs of that property. But you can choose any property you like. Okay, so that's the first difference.
Yeah.
The other thing is with shared ownership, maybe you get a shared ownership on 25% and you have to find a mortgage for the remaining 75%. Our product, you have an equitable share and you can scale all the way up to 100%. You don't need a mortgage on the side like you do with a shared ownership product. The third key difference is generally with shared ownership products, as I mentioned earlier, when you want to buy equity, they will revalue the property. And if the value's gone up, then you'll have to pay the increased market value.
Okay.
With us, our policy to make it affordable is even if the property's gone up in value, our policy is to sell to our customers at the original acquisition price to make it remain affordable to our customers. So those are the three key things.
So in that aspect, you said that if they decide to sell it, you would get your share of it, which is very fair. But the owner could decide to just pay you guys off and then sell it after.
Yeah.
But you guys don't. I mean, someone can be really pay about that, but alhamdulillah, like you guys, because your objective is we want them to own their property, you know, alhamdulillah.
So look, our mission is to get people to full home ownership.
Yeah.
And our business model is built around the rent.
Yeah.
If we do make money from a property sale, we
Yeah.
consider that to be bonus. Right?
Yeah.
That's not what our business is about.
Mm.
But we do have clauses in there because we're being very generous to our customers.
Yes.
So they should be fair to us as well.
Yeah.
So we do have a clause saying that you can't sell the property. You can't buy us out and then immediately sell it.
Okay.
If you do that, then we're still entitled to our share because you've done us a disservice.
Okay.
But if you buy us out and then later on you sell it, no problem.
Do you have a time limit on that?
I believe it's 6 months.
It's a year.
A year.
No, that's not bad.
So if you sell it within 1 year,
The property's
then
going to go up in value.
exactly.
I'm joking. It probably is,
But
yeah.
ultimately, look, we try not to fuss too much
Yeah,
about that because for us, that's really just a bonus.
I mean, yeah, I'll be honest. I think if someone, I mean, I'll be grateful. Like me personally, like I'll be grateful that you gave me the opportunity to stay away from riba. The money invested with you guys helps towards other people owning our property, and I think someone have to be really ungrateful to go down those limits of, yeah, let me buy it, and then I mean, I'll be honest. I would want to give back to Pfida. I would be like, okay, how can how
the wuss-wuss.
exactly? That's what I'm saying. Yeah, yeah. But may Allah protect us from as well. So yeah, they always come those last minutes where and that's why it's very, very subhanallah. May Allah protect us. Yeah, I mean, you would want to give back. I'll be honest with you. But anyways, okay. So okay, what happens?
It's actually an important point you make because actually, if you imagine, as I said earlier, for this type of product to flourish and grow, as a community, if we want this product to succeed, as a community, we have a responsibility to help it succeed.
Yeah, exactly.
Right? And so, by effectively stealing our share,
Yeah, exactly.
you're preventing us from helping.
Exactly, that's what I'm saying. So
And
I
that's
mean,
what the mindset we need to
exactly.
have.
Someone has to be really ungrateful to go down those levels to do that. I mean, you would want to give back, not how can I make more. I mean, they've helped you buy a house at the cost that you bought it, not even increase. I mean, yeah. But anyways, may Allah protect us from that. Okay, what happens if I miss rental payment?
Yeah, great question. So let's first consider a mortgage plan.
Yeah.
Right? So with a mortgage, let's say your monthly payment is £1,000,
Yes.
which is your interest plus your capital repayment.
Yeah.
You have to pay £1,000 on the nose every single month.
Yeah.
And if you are £200 short one month because your car broke down and you had to pay the mechanic, you've only got £800 in your pocket. Now you're in default.
Yeah.
And the bank is going to maybe give you a couple of months payment holiday to make good on that shortfall.
Or they're going to mortgage you.
Or
Death grip
they're
already.
gonna death grip you. They're going to take your home away from you
Yeah.
and sell it, and they'll get first dibs on whatever
Yeah.
the sale prices are. Right. Now, if you consider the Pfida product, let's say your monthly target payment is £1,000.
Yeah.
So this is your rent plus your target level of equity purchase to achieve your goal of full home ownership.
Yeah.
Okay. In a month, if you've only got £800, you can pay £800.
Yeah.
So let's say of that 1,000, maybe for argument's sake, £500 is rent. 500 is your target level of equity purchase.
Yeah.
Well, you could choose to pay 800, and so you just buy £200 less equity in that month. Okay. So you've got breathing room in times of difficulty. Now let's say Allah protect us, you lose your job, and you can't afford to pay your rent.
Yeah.
Okay. Well, with our product, as Sheikh Salman mentioned, you're actually buying shares in the entity that owns the property.
Okay.
So you are one of the owners of the entity that owns the property. And you've actually got shares, you get tangible share certificates. You see the certificates, proof of your of your equity. So you have tangible equity and you can actually trade equity back with us in times of difficulty. So if you owe £600 of rent, you can give us £600 of equity instead, and you're not in default. You've still paid us your rent, but instead of paying in cash, you paid in equity. And from our perspective, we don't consider that a default. Now you have to understand, if you pay some of your equity over to us, your ownership share reduces, and that means your rent will go up again. So it's really a last resort, it's an emergency option, but the option is there for extreme difficulty. And to put it into context, with a bank mortgage, you might get 2 months payment holiday. Our average customer, if they have 10% equity and they lose their job on day one, Allah protect us all, without ever having made a payment, that 10% equity buffer, as we call it, will last our average customer on average about 2 to 4 years.
Oh, wow.
So huge protection, so that if you're going through the hardest time of your life, you're down on your knees, you've just lost your job, you don't have to think, God, how am I going to pay the mortgage? You know you've got the roof over your head, you know you've got the protection of your equity buffer, so you can focus on what's important, getting back on your feet, finding another job, and starting to make your payments again. And this is the wisdom behind the Islamic etiquette, the Islamic equity partnership-based model. partners look out for each other and they help each other in times of need. Whereas a bank comes and kicks you when you're down and takes your property away from you. And that we find abhorrent. We feel that should be illegal. And that's why we do things differently, and we're proud to be different.
MashaAllah. Amazing. Two last question. Is there a refinancing option with Pfida?
So in principle, yes. So people can refinance with us with a buy-to-let because, and I didn't explain earlier how the buy-to-let is slightly different. So in the buy-to-let, actually the customer has legal title to the property. And then our sort of co-ownership principles are enshrined in the contract we have with the customer. So the Sharia principles are the same in exactly the same in both products. It's just the legal structure under English law is slightly different. So in a buy-to-let contract, because the customer has legal title, if they want to refinance, so suppose they're on a conventional mortgage and they want to refinance with us, because there's no requirement for them to transfer the property over to us, then it's quite cost effective because that will incur transaction costs. And the major thing is SDLT on that transfer, right? But if somebody has, if somebody wants to live in that property, or they're already living in that property and they've got a mortgage with a conventional bank or with an Islamic bank, and they want to transfer that over to us, the challenge will be that they have to transfer legal title of the property to Pfida Finance PLC, our special company, and that will incur quite a lot of stamp duty. So it's possible in principle, if somebody's okay to pay that transaction cost, that's fine. But generally, we don't recommend it because it's quite expensive.
So for buy-to-let, no problem. For the home you live in, it would be very expensive, and we don't recommend it. We are working on new products to get around this stamp duty issue, and unfortunately,
that's a question.
It's just not a level playing field.
How does stamp duty work? They're asking as well.
So unfortunately, it's just not a level playing field at the moment. So the way the tax laws are set up, disadvantage this type of equitable product, unfortunately. And that's something we're lobbying and we're trying to get changed. And we're also looking at, can we have a different structure to our product to get around this issue? But unfortunately, Islamic finance is operating on a very unlevel playing field at the moment. And it's our customers who are suffering, unfortunately, as a result of that. The way the stamp duty works, so it's really, really important to understand this. With the buy-to-let product, it's just as you would expect it to work. With the home provision scheme, which is the home you want to live in, because that property goes into the special purpose company, so the special purpose company buys the property first and pays stamp duty on the purchase. Later down the line, when you've built up enough shares to buy the property, that property transfers to you. And then you will pay your stamp duty at that point in time. Okay? So the company will pay stamp duty first, and that will be a higher rate of stamp duty. That will get reflected in the acquisition cost. So if it's a £100,000 property and we have to pay £5,000 of stamp duty on it, we will say the acquisition cost of this property is £105,000. That will be the price we offer to sell to you at £105,000. Even if it's worth £400,000 in 30 years' time, we'll sell it to you for £105,000. That's our policy. Okay. So in 30 years' time, you will then be buying a property for £105,000, and at that point, you will have to pay your stamp duty if there's any stamp duty paid. It's very important to understand the mechanics because it's very different to a mortgage.
Okay. Any last questions? Any specific different questions?
You said, can I invest if I don't live in the UK?
Oh yeah. So a lot of people are asking around, globally that can they invest if they are not in the UK?
The best thing I'd say is get in touch on info@pfida.com. It will depend what country you're in. So for some countries, it's not a problem. Europe, for example. For other countries like the US, we just can't do it. It's just too much bureaucracy. And it will just depend which country you're in. So get in touch with the team and we'll let you know if it's possible.
Okay, where can they?
But in the US, if they want to invest a large amount or they're an institution, then we're open to those conversations. We have had some of those conversations because then it makes sense.
Okay. Can they apply in my link, or is there a different link for the question that I just asked about
for investing?
So
the link in this video is just to register interest.
Okay, so that's register interest. Okay.
And then off the back of that, we'll send you some emails with how to find out more and how to sign up.
Yes, for the other one you talked about, they go to your website?
Again, those emails will point you in the right direction, inshallah.
Okay.
So the first thing is to register your interest through this link. That's how we know you're interested in finding out more. And then we'll send you all the emails with all the information and guide you where you need to go, inshallah.
Okay, so the link that I have there, that's pinned. If you're interested, you can register there. inshallah. Any other last questions before we wrap up? Do you have any other different questions? Anything that we can picked up on? And if there's anything we missed, we've done a podcast on my YouTube channel. You can go there, inshallah. You can see on the video list, inshallah. You can watch that. That will give you maybe a better understanding. Yeah.
They're just asking, where does the house go when you die? Does it go to your children or heirs?
Where does the house go? Oh, like what if they don't pay this? If they don't fully own it?
That's right. So in the middle of the term, they haven't fully bought our share of the property.
Yeah.
If they pass away, may Allah protect us.
Mm.
What happens to the house? So their children or their heirs can inherit that and carry on with the contract. There's absolutely no reason why they can't do that.
So under a conventional mortgage, they'd be inheriting the actual property.
Yeah.
Here, you own shares in the company that owns the property. So your children could inherit your shares effectively. And shares can be inherited in a very similar way to property.
Okay.
So they'd inherit the shares, but also the contract that governs the relationship with the company, so that they can carry on with the home ownership program.
Okay, interesting. Any other questions, guys? If you've got any last questions, please comment now, because we're going to wrap up in about a couple of minutes. If there's any questions that were missed out, or if you just joined in, let me know, inshallah. If there is any questions, I'm going to give it a couple of minutes, inshallah. And yeah, if you are interested and you've heard this, you've watched the podcast, you can register. The link is in the description. It's also in the chat. I've pinned it at the top. If you have any more questions, guys, feel free, inshallah, to ask. That's the reason we're doing these lives. And yeah, if you have any interest, you can go to that link. Any last questions? Let's see if there's a last one.
I think we have a last question.
Yeah.
Why should I choose Pfida over competitors such as
Why?
Bank?
I think we discussed that, but unless you wanna.
The key differentiator is with our product, there's no debt. So imagine you can buy your home, pay no more than you pay elsewhere, but never be in debt. Have complete flexibility over your payments. You can literally choose what you want to pay month to month.
Yep.
And never have to worry about the roof over your head because you've got that equity buffer.
Yeah.
So even in times of difficulty, you don't have to worry about the roof over your head. So our product is designed on a true Islamic partnership, as opposed to a debt-based model, which is how banking products are designed. And that partnership-based model grants more protections in times of difficulty, as well as providing a lot more flexibility to govern the agreement on your own terms according to life's ups and downs with no penalties whatsoever.
Okay, that's it. Okay, guys, you guys can, if you just joined now, it's going to be public, so you can go back and watch it, inshallah, with your friends and family. So yeah, I hope that's answered some of the questions that you guys had. The podcast we've done with the Pfida team is also on my YouTube channel. You can go and watch that. And yeah, if it's answered your questions, if you are happy with the content, you've done your istikhara, took financial advice, then I will ask you guys, inshallah, to register on the link. And yes, and leave the matter to you guys, inshallah, brothers and sisters. Thank you, Barakallahu Feek, Reza and Sheikh Salman. May Allah bless you guys, inshallah. We'll see. We might do another one in a month's time. We'll see, inshallah. Yeah, if you have any questions more further, put it in the comment section. And maybe on the next live, we can answer those questions. Till next time, assalamu alaikum wa rahmatullahi wa barakatuh.